In this video, traders, I want to talk a little bit about some of the things I learned from listening to the traders in the trading pit on the S&P 500 floor. Stay tuned. Hey guys, warm welcome to you. All right, so many years ago when the S&P 500 pit was very active, okay, you had lots of traders in there and they were doing orders from outside, from kind of external money. They were executing, the locals were executing on behalf of accounts, the brokers were coming in to execute on behalf of accounts, and the locals were trading on their own account as well. So you had this unusual situation where locals would have a stack of orders to do and they could trade on their own account as well. So they had a really significant edge, and why a lot of locals struggled to transition to the to electronic, and some did, some made a really good success of it, some didn't. But you'd have a situation where they'd know where all the orders were on their book and they could trade kind of in front of them or behind them. But that's not what I want to talk about today. I used to listen to this pit audio religiously, specifically day trading the US indices. It was a really good edge at certain times. Now, the majority of the time, it was just noise, right? It was just, you know, people messing around. You could sometimes hear them throwing bits of paper around, and it was quiet. When it was quiet, it was a good opportunity to not trade. It was a good reminder to say to yourself, hey, listen, market's quiet. These guys have got time to lob bits of paper at each other. Why the heck would I want to get involved in it? There's no edge here. And that was good. You know, and that was the majority of the time. Or it would be very quiet, like two-way trade, and the guy doing the commentary would just be saying, you know, 57 bid, 57 bid, 50 half offer, you know, and it would just be sitting there plodding backwards and forth. And again, don't overtrade. Now, when it used to get interesting is when you'd hit a roar, a lot of activity, a lot of locals, a lot of people shouting, trying to get filled, you know, sell me 10, sell me 10, sell me 10. You just hear this roar at certain levels. And that was a good indicator that there was a lot of volume coming into the market. There's a lot of order flow coming into the market. So that's a good indicator that these stacked orders that they had in their order book were getting filled. It's also a good indicator that other brokers and stuff were getting interested. And I remember actually during the flash crash, I think it was during the flash crash, maybe I'll do a separate video and talk about that exclusively, guys are trading during that and using the pit audio. But there's times when you'd have a lot of external brokers and the pit audio guy go, Goldman's coming in now to buy, Goldman's coming in to buy, you know, say some of the broker names, and you'd be at a certain level, and let's say you had half an hour or 15 minutes even to go until the close, or the cash close, and you'd have these brokers coming in and they were trying to buy. You bought it. You just bought the thing, because if you thought these guys were so urgently coming in, buying at the market, number one, the local's going to make them pay for it. The locals aren't going to give them a good price for that. They're going to bid it up, and then give them the fill, and that's going to transition to the screen. So when we were kind of looking for the press into the close type trade, if we heard that a lot of the brokers were coming in and bidding up and buying, I'd be buying, I'd be pressing it, I'd be adding, trying to squeeze up into the close. So that was a good one. Another one would be, there was a big local called Number One Local, and this guy, you know, had deep pockets and was very aggressive with his trading, and he would know how other locals were positioned, because you can just see, you know, that, you know, John Smith over there, he's been long since so and so, and he would feel when they were all positioned in one way or another. And his favorite move, and I used to fall for it time and time again, I used to think these guys are just literally walking into the trap. They'd be getting long and they'd be looking for a kind of rally on the market. And you could see why. Technically, you look at the chart and go, I get what they're trying to do here. And you wouldn't know that. You wouldn't know who was getting filled, but you can kind of feel when this started to pan out. And then one local would start to sell it. So it'd start to sell. And then they'd buy some more. It'd start to sell. They'd buy some more. It'd start to offer under the bid. So bid was 65. He'd offer 64. So it'd be pressing it lower. These locals were getting stuck, caught in it, and then eventually he'd press it so hard because he just kept selling it. He had deeper pockets, he had more aggression to him, that eventually these locals had to come out of the trade. They had to take the loss. It would normally be through an intraday low. So the prior low would be there, it would push through the intraday low, they'd have to vomit out the position, he would cover the position into that selling, and then he'd walk out. And so really, I mean, guys, this is, you know, a really very unique kind of ecosystem here of traders and how it worked. But same kind of thing, these weak hands were getting forced out by bigger hands. Now his specific job was to drive the market, and he could do that. It was when it was reasonably quiet. There was not much flow against him. And of course, I think now when it's quiet, you probably could drive a market, you know, reasonably if you had enough deeper pockets to do it. But the game's changed now. The game's changed. But what's interesting is knowing that everybody, those locals, had to get rid of that trade at that level. It was their, you know, complete capitulation point. You know, they weren't going to hold it anymore. They were sitting on a loss they couldn't stomach, and he'd just, you know, take him to the cleaners, take his money, and literally walk out the pit. He'd done his job. He'd pressed it low. He pressed it lower. He kept pressing. He kept pressing. He wasn't going to give up on it. Kept hammering firepower into it, and the rest of the locals couldn't do anything but take the loss, and they were just giving their money to him. So that was super interesting. And now, of course, guys, you know, things have changed. It's all electronic, but we're still trying to do the same thing. You know, you know, my process is still very much on, you know, what's price doing, how's price behaving, and thinking about the bigger players. Even though we can't hear who the bigger players are now or see who's actually behind the order flow, we can think, right, that's wicked through the lows, it's pushed back up, now we've got a bit of a bid, we've pushed above the high, volume's here, this is in the uptrend, this is the red flag, this is the green flag. Okay, I think momentum ignition is coming up, I'm going to take the trade. It's past my filters, we go through a lot of thought process about who's behind the deal, who's on the other side of the trade, and that's how I think about it. And it goes back to that thinking of, okay, it's not so much a chart pattern, which is nice to get into the trade and minimize the risk, smallest amount of risk possible, the greatest amount of reward that we're trying to achieve. It's then thinking, who's on the side of the trade, who's trapped, who's hurting, where's the point where we could really spark some momentum ignition? Have we got shorts trapped? Have we got this? Have we got that? And reading that before it happens. So anyway, guys, whatever setup strategies you're using, you know, I just thought it'd be interesting to share with you some of my thoughts and memories, if you like, from when I used to listen to the Pit audio religiously every day. Take care. See you next one. Bye bye.